What if I told you India's sunrise sectors could be the rocket fuel for the next wave of wealth creation? Big structural shifts are driving massive growth in digital finance, renewable energy, and high tech defense, opening up opportunities that smart investors can't afford to ignore. In this video, I will break down three sunrise sector stocks to watch right now. Inox Wind Ltd, leading the renewable energy transition. Jio Financial Services for digital finance revolution, and Zen Technologies tapping into India's defense modernization boom. Stick around till the end. These sunrise sectors could help you spot tomorrow's multi-baggers today. Hey there, I am Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing in the US and India. This material is for educational purposes only, not a buy or sell recommendation. Do your own research before investing. By the way, don't skip the next segment on broader market scenarios and recent RBI measures before jumping into individual stocks. First, the big picture. The Nifty 50 index is hovering near all-time high, crossing 25,000. A breakout looks likely if corporate earnings momentum holds and foreign inflows continue to strengthen. In parallel, RBI has recently stepped in with measures to keep system liquidity comfortable. This supports healthy credit availability and keeps borrowing costs in check. Meanwhile, India's GDP growth is projected to stay above 6%, fueled by resilient domestic consumption, a pickup in private capex, and strong government spending on infrastructure and renewables. The structural story remains intact, and the sectors we are covering today, from digital finance to renewable energy and high-tech defense, stand right at the heart of these long-term trends. Let's first start with Inox Wind, one of the India's key wind energy players. Thanks to one of our subscribers who suggested to review Inox stock. This is a great find. Inox Wind Ltd is an integrated wind turbine manufacturer with India's massive 500 gigawatt renewables target by 2030. Wind is making a comeback alongside solar, especially through hybrid power projects. Let us now look into financial metrics. In the last financial year, revenue grew at 105%. Cash profit after tax surged by 800%. Yes, 800%. Order book is over 3.2 gigawatts, providing revenue visibility for 2 to 3 years. This is very, very important. On the valuations front, stock looks great. Price to book value of 5.68 compared to industry average of 14. Similarly, price to sales at 6.65 compared to industry average of 19. EBITDA margins have improved to 21% thanks to better execution. What are some key strengths? Inox Wind is positioned to ride India's massive push for renewable energy, with wind capacity expected to expand rapidly over the next decade. The company installations are spread across 12 states. An interesting aspect is that every operations and maintenance contract runs for about 25 years, providing predictable cash flow. As India aims for ambitious clean energy targets, Inox could be a key player in powering this wind energy boom. So, what are some key risks with Inox? Execution delays are the most common in this sector. Watch for timely commissioning and cost control. If they keep their order inflow healthy, Inox could ride the clean energy push strongly in the next decade. Next, Jio Financial Services, the new digital finance arm spun off from Reliance Industries. What they do? Jio Financial wants to be a one-stop shop for consumer lending, digital payments, insurance, and even wealth management. Then, what is their competitive advantage? They can tap into over 465 million Geo subscribers. You heard it right. 465 million Geo subscribers plus Reliance retail customers, providing enormous opportunity for cross-sell and upsell. Jio has also partnered with BlackRock, one of the world's prominent asset management companies, to launch digital asset management business. That's a massive opportunity given India's underpenetrated mutual fund market. Coming to financials, net worth over 1.17 lakh crores, giving it a rock solid balance sheet. Debt to equity ratio is extremely low at 3.2%, so they have room to grow their loan book safely. High operating margin at 76%. Return on equity is still ramping up but expected to scale between 12 to 15 in the coming years. What are strengths? If Jio executes like it did with telecom, it could reshape consumer finance, offering everything from BNPL to small business loans. What are some key risks? One, execution and regulatory discipline will be critical. Two, the NBFC space is fiercely competitive, so keep an eye on loan book growth, cost of funds, and how quickly they launch new products. Note that stock is currently near 52-week high. It is not a good idea to go all in right now. Buy small quantities, build positions slowly over next few months on the way up or way down. Finally, let's talk about Zen Technologies, one of the India's most interesting high-tech defense plays. With an uncertain geopolitical situation in the world, India's defense spending is going up significantly every year. What does Zen do? ZenTech develops combat training simulators, virtual ranges, and anti-drone defense systems. India faced a surge of drone and missile threats from neighboring countries during recent conflict. Zen's counter UAV, which is counter unmanned aerial systems, were rapidly deployed along border zones like Punjab and Jammu to detect, track, jam, and neutralize hostile drones. Unlike traditional heavy PSU, Zen is an IP-driven R&D player. They create tech that modernize military training and border security. Why it stands out? As I said earlier, India's defense budget has touched record levels with an emphasis on self-reliance. This is a great opportunity for Zen. Zen owes its tech, so margins are high, and once armed forces adopt a system, it is sticky. Growing exports. Zen is already supplying to Africa, Southeast Asia, and Middle East. Jumping into financials now. Revenue grew at 121% from 440 crores to 974 crores. PAT grew at 119%. A healthy net profit margin of 28% is rare in defense manufacturing, and it has zero long-term debt plus steady R&D reinvestment to keep their tech edge. On the order book, around 700 crores multi-year revenue runway. So, what are some specific moat for Zen? Indigenous IP, strong export pipeline, and cost-effective solutions for forces that want to modernize without massive live-fire training expenses. ZenTech is a hidden high-tech defense gem, riding India's defense modernization and export opportunity. If they execute well, they could benefit massively from India's growing share in global defense market. If you found this video useful, smash that like button, subscribe for more investment deep dives, and comment which stock you want me to cover next. Thanks for watching and see you in the next one.